What's going on, guys? Welcome back to another video. So in this one, we're going to be going over the potential for the market to squeeze back higher, very similarly to what we saw when the market rallied all the way back up to 431. Now, there's a couple of key reasons for this. We're going to go over the technicals, the news, the positioning of exactly why this could happen, specifically with earnings. The biggest earning week is happening this week. So there's a lot of moving parts here. There's a lot of economic data coming. We have the Fed meeting next week. We have the CPI print coming after. There's a lot of different things happening. We're going to break it all down here so you guys know exactly what to look for going into the next couple of days and weeks. So before we get into all of that information, if you wouldn't mind hitting that like button down below, costs you nothing to do it, but it helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video and you don't miss anything. So getting into the chart right here of the SPY, there's a couple of key things that I want to look at here. So this is on the daily time frame. We are breaching above that 48 EMA here. We're through a lot of key levels of resistance. The RSI is peaking its way above 50 here. The MACD is starting to build its momentum, and we could see upside all the way up to this 200 EMA right around 403. Now, it might seem like a far distance to travel, but remember, the market just made new lows at around 348, and we're already back over 380. The one thing that I do want to talk about technically here is when we're looking at the SPY on the 4-hour, it is getting a little bit overcooked. We see the RSI on SPY breaching over or just getting very, very, very close to that overbought territory at 69.93 right now. ADX is starting to build that uptrend. We are seeing the MACD also building this trend here too. But this is a pretty aggressive move off of this 361 bounce here. So again, it is a little bit overbought. I would not be surprised if we were to see a pullback here. And the other explanation as to what we could be seeing right now with the market is a classic earnings run up. Now, in the past couple of quarters here, there really wasn't a reason to be all that excited about companies' earnings. Now, this quarter, with a lot of these valuation resets that we've seen, where we've seen higher rates, companies selling off significantly, well, when we see their numbers coming out, they could be beating these revenue estimates and these EPS estimates, but the key things to be looking for are the margins and guidance. If a lot of these big companies coming out throughout the rest of this week and next week do not issue guidance, then the market is most likely not going to take that positively, and we're going to be coming back down lower. If the guidance is good and overall these companies think that they're going to be able to rebound, well, then the market could continue to go higher, but earnings is going to be critically important. Now, we've also talked about all of the economic data coming out this week too. Tomorrow, we're going to get new home sales. Thursday, we get the preliminary GDP for Q3. Friday, we're going to be getting the PCE inflation data. There is a lot of economic data coming out this week. Next week, Fed meeting. The week after that, CPI report. So there's a lot of data coming out here. Now, again, with the volatility that we're seeing in the market right now, be very, very careful. It's not the time to start being a hero. Those intraday scalps are going to be super, super powerful. Our members over here are having a lot of success. K-Man, nice day over here, buddy. Andy killing it, another $500 day. Pepe up 2% on the day. He actually matched my gain for the day over here too, as you can see. So if you guys do want to join me on these live streams every single morning, get access to the proprietary trading algorithms, the alerts, the trading curriculum, make sure you guys check out that link down below. But going forward here, this is kind of the thesis as to why we could potentially see a little bit of a squeeze higher. In recent days, Wall Street's biggest bear, Morgan Stanley's Michael Wilson, has flipped to a warning of a market melt up as a tactical call based on technicals and positioning, not fundamentals, very similarly to what we were going over in the beginning of this video with the technicals that we were seeing on the SPY. Bank of America's Michael Hartnett also called for a sharp, if brief, bear market rally with similar technically driven reasoning. JP Morgan flow trader Andrew Tyler, who said that the key to a more aggressive squeeze may lie with the following: CTA buying, thought to activate in the 3,800 to 3,900 range, buybacks, which could be very interesting, said to accelerate coming out of the earnings blackout window as soon as next week. If you think about company buybacks, you're essentially decreasing the amount of supply of shares on the overall market, so that can cause stocks to rise here too. 2. Macro data, this is still driven by market yields in the November 2nd Fed meeting and the November 10th CPI release looming large. So those are the things that we really need to be looking at here. But the other thing that I do want to talk with you guys about too is, before we talk about this housing market correction or this collapse that we could be seeing, is a couple of things in metrics, some almost indicators, if you will, to look at going forward over the next few weeks. So the dollar, we were talking about this a lot this morning. Now, we ended up seeing the dollar having this very significant sell-off here. Now, this could have been due to the pound strengthening over a little bit of excitement over the new prime minister. We also saw USD JPY starting to sell off here too, getting away from that 150 danger zone. And we also saw a sell-off in these bond yields, which actually means that investors were going out and buying these 10-year treasury yields. So we are seeing money starting to flow around in the dollar, the 10-year, the 30-year gilts, USD JPY are going to be key indicators to look out for going forward over the next few weeks here. Now, again, I do want to go over this housing data a little bit here too. Home prices plunged the most since 2009, and Pulte CEO fears financial and psychological hurdles ahead for home buyers. I did hear a statistic recently that if previously at those lower rates you were qualifying at about for a $600,000 loan, you would now have the same mortgage on a $380,000 loan with the rates today. So you've effectively cut your buying power in half, taking a lot of demand out of the market for those higher priced homes, and then you would end up seeing these prices end up coming down. After tumbling for the first time since 2012 in July, Case-Shiller's 20-city composite home price index was expected to drop even faster in August, the latest data available, as mortgage rates soared, crushing affordability. Analysts were right as the 20-city composite index plunged 1.32% month over month, far larger than the 0.8% drop expected, diving the year-over-year growth to in the 20-city composite to 13.08%, well down from the 14% expected. Now, when we're thinking about what's going to happen with the housing market here, well, we understand that the housing market is going to take a little bit longer in order to sell off. Remember, we've talked about this a lot. If I wanted to go out and sell stocks, well, I could do that right on my brokerage right now if I wanted to. But in order to complete a sale of a home or a purchase of a home, it's going to take a little bit longer for these transactions to go through. So the housing market is going to lag. Now, we're also going to be raising rates even more. Now, if the 10-year treasury yield starts to go up again, that's going to increase mortgage rates. And just like we said with that statistic, well, you're no longer going to be able to qualify for as expensive as a home, which is going to drive home prices down by decreasing the demand in the overall market. So the home price decrease is most likely not anywhere close to being over. And that's something to keep in mind, not only if you are looking to buy a home, but if you're looking at these overall macroeconomic trends. Because think about this right here. Everybody needs to live somewhere unless you can't afford it and you're going to be homeless. But if you think about where people are going to go if they can't buy a home, they go back into the rental market. Well, if you have a really, really high demand in the rental market, we just saw the rental numbers in the last CPI print, and they were relatively high. If we start to see more people going back into the renters market, well, that could further increase the CPI, creating a little bit of a paradox for the Fed. They need to raise interest rates to get inflation under control, but some of the key aspects of CPI will actually go up because of consumers, or basically everyday people's behavior in the housing market. Now, that's not the only thing that's going to go into CPI, but it is a contributing factor that you guys need to be aware of. So that is going to wrap up this update here on the overall market, guys. If you did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening or making money in this market. I'll see you guys in the next one. Peace.